you riding the Bitcoin wave or risking being left behind? The investment world is full of people betting on Bitcoin, excited about its potential. And who wouldn't be? No one wants to be on the wrong side of a financial tidal wave, struggling to keep up. Yet, let's take a step back and consider a scenario painted by Warren Buffett, a man whose financial acumen speaks volumes. Imagine, he suggests, if the entirety of this room owned all the farmland in the United States. And then, with a mere offer of a 1% stake for $25 billion, he'd be writing a check faster than you can blink. Why? Because farmland yields tangible returns, producing food to nourish and sustain. Let's shift the focus to apartment buildings. Again, a 1% stake in all the apartment houses in the country, offered at a similar price, would be an irresistible proposition. Rental income flows steadily, ensuring a return on investment that stands the test of time. But what about Bitcoin? There's the rub. Buffett's skepticism shines through as he contemplates owning all the Bitcoin in the world for a meager $25. It's a pass from him, and with good reason. Bitcoin, unlike farmland or apartments, holds no intrinsic value. It's a digital entity, devoid of the ability to produce anything of substance. If they were to hold all the Bitcoin in the world, it would undoubtedly raise eyebrows. Everyone knows where they stand, and if they were to start offloading Bitcoin, the questions would come flooding in. Why should we buy Bitcoin from you? People would ask. Why not create your own currency? Call it Buffett coin or something. And you know what? They'd have a point. After all, why pay a premium for something that lacks inherent value? That's where the distinction between productive assets and speculative investments becomes glaringly evident. Productive assets, like farmland and apartment buildings, offer tangible returns. They produce food, they generate rental income, they contribute to society. But Bitcoin? It's a different story. Its value hinges on the whims of the market, on the hope that the next person will pay more than the last. It's a game of hot potato, with commissions and frictional costs lining the pockets of those who facilitate the trade. Investing in assets that create real value, that contribute to the economy, that's where the true wealth lies. As for Bitcoin, well, it's a speculative gamble, one that may pay off for some, but holds little appeal for those grounded in reality. But consider this. When one group of the public takes money out or a new group of owners enters the scene, it's not like new money magically materializes. It's simply a reshuffling of funds, a game of musical chairs where the music never stops. Sure, there's movement, transactions, and the illusion of wealth changing hands, but in reality, the room holds no more money than it did before. It's a shell game, fraught with the risk of fraud, hidden costs, and all sorts of uncertainties. And let's not forget, this phenomenon isn't new. Throughout history, certain assets have been imbued with value despite their lack of tangible productivity. Take, for instance, a masterpiece painting. While it may not churn out goods or services, its cultural and historical significance can endure for centuries. Even if you were offered a pyramid for sale, with the promise of attracting viewers and standing the test of time, it still wouldn't produce anything tangible. Absolutely, there's no denying the allure of attractions like the pyramids. They hold a certain mystique that draws people in, much like a captivating parade. However, when it comes down to it, assets need to deliver something tangible to someone in order to hold real value. And let's talk about currency. Sure, we could dream up Berkshire coins or Berkshire money, but that's a slippery slope. At the end of the day, the only universally accepted currency is the United States dollar. With nearly 2.3 trillion of these bills in circulation, it's clear that people trust in the stability of the US government's currency. So, while Berkshire coins might sound appealing, the reality is that they could never replace the almighty dollar. Anyone who thinks otherwise is simply out of touch with reality. So, despite any potential shortcomings, it's clear that when it comes to currency, the greenback reigns supreme. Whether Bitcoin's value skyrockets or plummets in the next year, 5 years, or even a decade remains uncertain. But one thing is crystal clear. Bitcoin doesn't multiply, it doesn't produce anything tangible. Just look at the gold rush on Wall Street, where the allure of riches blinded many to the inherent risks. And in recent years, the stock market has taken on an almost mythical quality, teetering between casino-like speculation and genuine investment.